Hey guys, Eric here, Mr. Fired Up Wealth. And if I told you that there was a company that had a platform, had a game engine that created about half the games in the world, and they're currently private, but you might be able to own shares of the company next week, would you be interested? Well, that's exactly what I'm about to cover today. Unity Software is going to IPO and shares will be available to the market next week. It's something that you might not know a lot about in terms of their diversity, so this video is going to break it down. Should you have it in your portfolio? Am I going to buy it in my portfolio? Stay tuned to find out. All right, guys, if you're a gamer like I am, that intro probably got you pretty hyped up. I know it did for me. I thought I'd share it with you. Now, I'm more excited about Unity Software right now than I was yesterday because I just spent the last few hours looking through the company, looking through the website, digging into it as much as I can. And I've got some great information I'm going to share with you on this video. Now, while I'm going through some of this information, I'm going to play an actual short film that they made that you can watch on YouTube. I recommend you watch this video with the sound on because it's pretty cool. But just for visual effect, I thought I would play it in the background. The background that you're watching right now is actually created by Unity Software's 3D engine. So let's get into it.
This is the place. Doesn't look like much.
Okay, so Unity Software obviously provides a platform for creating 3D content for a variety of industries. What a lot of people don't realize, I didn't realize until I started looking into the company, is that they do a lot more than just video games. So they're based in San Francisco. They were founded to develop a platform to enable users to create 3D games, but also media and entertainment content, architecture, engineering and construction visualizations, and even automotive, transportation, and manufacturing content. I thought that was very interesting. So they are very diversified outside of video game software. Now, Unity Software intends to raise $950 million on this IPO. And they're going to go under the ticker U. So just U is the ticker for Unity Software. And if you look at the information that they actually registered for the SEC listing, they've actually done pretty well. They have a nice growth trajectory, and they're turning the right direction when it comes to their losses and their cash burn. This is generally when I like to get into a company right before they start to break out. And I think that this company is really close to getting to that point. Their CEO is actually really interesting. He came from EA Sports, and he's been the CEO of Unity Software since 2013. But prior, he was with EA Sports as the CEO there. And then before that, he was a managing director at a private equity firm called Elevation Partners. So Unity Software has two primary offerings. One is for creating solutions. That's the content creation suite. The other is for operate solutions, that's grow and monetize the user base. And I'm going to show you later their website. They have a lot more solutions than you might realize. Now, the Create Solutions system is primarily provided through a monthly subscription revenue model, while the operate solution offering is provided via revenue share and usage-based revenue models. In fact, they give stuff away for free until it gets to a certain point. So what they actually are allowing companies to do is doing video games as a service. You've seen everything from database as a service to software as a service to training as a service to infrastructure as a service to platform as a service, and now you've got the video game as a service. So they have received actually at least $1.2 billion at this point. I know Sequoia Capital, Silver Lake Partners, JA Technologies. You see Sequoia Capital all the time when it comes to these tech IPOs. The firm really targets a wide variety of publishing studios as well as individual creators and accepts clients through their either its create or operate solutions. Frequently, customers onboard through one solution and then start to use the other, so that's really good. They can cross-sell and expand their footprint. Their sales and marketing expenses as a percentage of total revenue have been trending lower as revenue has increased. Obviously, that's what you want as an investor. And the sales and marketing efficiency rate has gotten a lot better too. It's about 1.1x, which is pretty good. In terms of Rule of 40, which this company is not a traditional, say, cloud software as a service company, but when you look at the Rule of 40, these guys came in at about 24% as of June 30th, 2020. But I do think that they're trending the right way. I like to find companies, I like to invest in companies that are going to be at the Rule of 40 in the next couple of quarters. I think this is one of those companies that's doing that. They're actually increasing their profitability. They're burning less cash. They're spending less money to make more money. And I think this is a company that could break out very soon. Their dollar-based net expansion rate was 142% as of June 30th, 2020. And a figure of above 100% indicates strong product market fit. So when you think about it, essentially it's a negative churn rate, and 142% is a really good number, so that's great. The video game market is expected to grow by 12%. So when you think of the global gaming industry, the CAG is 12% from 2020 to 2025. I think it's actually probably going to be higher, especially because of the pandemic. I think it's going to accelerate gaming. I also think that because this company is not just in video games, that they have an opportunity to capture more growth in that. The immersive gaming segment is expected to generate $4.5 billion by the end of 2020. I thought that number was really impressive. Esports and fantasy sites have continued to attract gaming investment as they represent immense potential, of course. Even like C Limited as a company that has a gaming division. You've got things like Take-Two, Activision. There's a bunch of them out there. But also the report forecasts that the console segment is expected to see significant growth during the forecast period. Of course, we've got the super cycle coming up with PlayStation 5 and the new Xbox. I think that's going to be a growth accelerator for this company as well. Major competitive or other industries include Epic Games. Of course, you know about Epic Games. Epic Games is trying to sue Apple right now, saying the Apple Store is a monopoly. They don't want to pay 30%. And it's kind of an interesting timing for these guys to actually come out with an IPO right at the same time that Epic is trying to fight Apple. I thought that was interesting. It might not be a coincidence either. Unity's recent financial results can be summarized 4 bullet points. So they're growing their top line revenue, which is good. They're increasing their gross profit and their gross margin. They have significant operating losses, but lowered negative operating margin, and they've sharply reduced cash used in operations. So if you're interested, I'll post a couple links so you can actually look at the financials as well. Now, Unity Software, the ticker U, intends to sell 25 million shares of common stock. The midpoint price is $38 per share. That's going to be about $950 million, just under $1 billion. And Goldman Sachs is actually the primary underwriter. And assuming a successful IPO in the midpoint price, you're looking at a company enterprise value on the IPO of about $10.5 billion, which to me sounds reasonable considering some of the companies out there that are much larger in terms of market cap already. $10 billion sounds like a lot of money, but when you look at a lot of other companies out there, there's definitely room for growth in this segment. And to me, $10.5 billion seems fair. It's an expensive IPO, but I still think that valuation, in terms of a long-term investor, I think it's something that will continue to grow for the company. The float is about 9.49%, which you may or may not be interested in. Here's a quote. "We currently intend to use the net proceeds we receive from this initial offering for general corporate purposes, including working capital, operating expenses, and capital expenditures. We also intend to use a portion of net proceeds we receive from this offering to repay the $125 million of debt under a credit facility, which we borrowed in order to provide liquidity in case of material impact on the financial markets related to COVID-19, but which basically they have not used any of that money to date, so that's good." The firm's financials do show strong top-line revenue growth and gross profit growth, reduced operating losses, and also cash used in operations. As we mentioned earlier, the sales and marketing expense have been dropping as the revenue has been increasing, which is good. They're starting to grow into that rule of 40 type valuation. The market opportunity for creating 3D digital content is large and is expected to grow at a substantial clip in the next coming years. And of course, video gaming is an enormous global industry with strong growth prospects. And you've got guys my age that play video games, and you've got young generations, so it's going to continue to grow as new generations come into the marketplace. So the last point I want to make, and then I'd like to show you some information from the website. So when you look at what their valuation is, they're going to be at a multiple of about 16.4. So that's an EV divided by revenue multiple of 16.4. Now that price is below the next 12 months revenue equity weighted for the average. The industry average, if you're looking at SaaS, is about 20.4x. That's actually the highest valuation really ever, of course, because of the global pandemic. These guys are much lower than the highs, so at 16.4, but the average is actually 14.4, so it is still a little bit expensive, but it's not on the high side of that expense. Okay, for the people that have made it this long, you're probably serious investors. You're probably looking at maybe buying this IPO, buying some shares of stock next week. So you're going to want to stay tuned because this information is going to get a lot better and it's going to give you a lot better snapshot of what's going on with this company. As I kind of alluded to a little bit earlier in the video, these guys do a lot more than just video games. It's really, you think about 3D content, you think about basically game engines, but you think about 3D engines in general. These guys have all these different platforms, from the Unity platform, there's Art Engine, there's Mars. I'm not going to read them all, but look at all the stuff these guys do. It's very diversified. Simulations, multiplay, Delta DNA, Game Tune, machine learning. So there's a lot of stuff going on here. It's very diversified. And if this is an article here from TechCrunch, and it's basically talking about, if you're familiar with the company, it says Unity is more of an enterprise software company than a self-service platform for indie developers. I thought that's really interesting. It says Unity's origin is a game engine software that is similar to Adobe Photoshop, but used instead for editing games and creating interactive 3D content. Users import digital assets, often from Autodesk Maya, which is another stock that I own, Autodesk, and add logic to guide each asset's behavior, character interactions, physics, lighting, and countless other factors that create fully interactive games. This is really cool stuff. Creators then export the final product to one or more of the 20 platforms that Unity supports, such as Apple, Google Android, Xbox, PlayStation, Oculus, Microsoft, everything. It's just incredible. In this regard, Unity is more comparable to Adobe and Autodesk than to game studio publishers like Electronic Arts and Zynga. Very interesting. So what are Unity's lines of business? So it says, since John took over as CEO and co-founder David Helgeson in 2014, Unity has expanded beyond its game engine and has organized activities in two divisions: Create Solutions, we mentioned earlier, and Operate Solutions. So if you look at this, you've got the Create Solutions, that was 29% of H1 2020 revenue. The Operate Solutions were actually 62%. And it actually has things in here I thought were interesting, like advertising. So you don't think of Unity software generally as advertising, but this is actually a big part of the Operate Solution. So you've got live services and advertising baked into there as well. It talks about a little bit about Epic Games. So Epic has three main businesses. They have game development, the Epic Games Store, and the Unreal Engine. Epic's core is developing its own games, and the vast majority of Epic's $4.2 billion in revenue come from that. Okay, that's not the case with Unity software. They do not create games, they create engines for other people to make those games. So they're very, very different. So there are other engines and platforms out there, but for the most part, Epic and Unity pretty much dominate. What I like about Unity though is that they're not they're not actually making games. So if I'm a game studio, personally, if I'm a CEO of a gaming studio, I'd rather work with Unity than I would with Epic, because Unity is not really in the business of making games and stealing my information. That's just an observation. I mean, that's just my opinion. It's something that to me would be relevant as an executive, but maybe not. It's just an observation, it's opinion. And then here it says, game engines are eating the world. The term game engine limits the scope of what Unity and Unreal are already used for. They're interactive 3D engines used practically for any type of digital content you can imagine. The core engine is used for virtual production of films, to autonomous vehicle training simulations, to car configurations on auto websites, to interactive renderings of buildings. So this does pretty much anything you can think of, and it breaks it down here. There are 4 main use cases for Entity's engine beyond entertainment experiences. So you can use it for design and planning, you can use it for training, simulation, and then human machine interfaces and AR. So this is a really interesting company. There's a lot going on. I personally think that I'm going to invest in this company. I probably will make it about 1, maybe 2% of my portfolio. I haven't decided yet. So if you are interested in following how I buy and what I'm buying, you can join Patreon. I actually post that. It's an educational thing to show how I buy my shares, how I sell my shares. And you can join Patreon. Just go on Google, search for Patreon, Fired Up Wealth. We've got a great community in there. Check it out. We also have a Facebook group. If you haven't subscribed, please do hit the subscribe button, hit like, hit comment. Appreciate your time and attention. Have a great rest of your day. Take care.